Hey guys, Mike here. So I was going through the charts. I noticed a pattern that has been going on since December now, right? Of when these run-ups have been happening. And I'm curious if you've noticed it. And more importantly, is it going to continue? Okay. And there's a couple things we need to look out for that absolutely could, in the short term, start pushing what we are in now as an oversold market up, right? And it has nothing to do with us. Okay. So I'm going to show you those two things. One we can track, one we really can't. You can, but it's really complicated. And then I'll finish up with just, it never ceases to amaze me how these big corporate executives pull the shady stuff they pull. The SEC knows about it, but just continues to let them get away with it time and time again. Like it's rocket science on how to stop from doing this stuff. And so if you hadn't seen that, I'll end the video with that one, okay? But let's get into the pattern first. I'm noticing on these run-ups, and let's see if it's going to continue, okay? So hit the like and subscribe button if you're getting out of it. Share the video. I really appreciate that. And here we go. And as you can see right here, it started at the end of December when I started seeing this, right? And I started tracking it, and you can see when you see the run-ups happening, right? It's usually in the last 7 to 10 days of the month, right? You get the pop there, then the institutions sell us off even more. And then when we come down the end of January, what do? End up running us back up, right? From the 25th on. And so we get a nice little pop there in the bear market. You don't call it a bear market rally, whatever. Anyway, you get a nice pop there of 10%. And then what do? They sell us back off until what? We get to the end of February, the last week. Boom, we'll go ahead and run us back up by another 10%. Great. Now we'll go ahead and sell you off. And then right before we get to the end of the quarter, exactly in the middle of the month, we're going to go ahead and run this puppy up around 15% in the last 2 weeks of March, and then crushed us. And I mean, literally on the day of the start of the next quarter, sell us off the entire freaking month, for crying out loud. And then what do? You get these volatile days up and down, up and down. And now what are we at? We're at the 16th of the month. So the question is, are they going to, and they are the institutions, going to start piling back in these stocks now, or are they going to wait to the end of the month? Because they definitely sold us down quite a bit, right? And so, when you look at that, what does it look like to me when I see that happen every time? It's almost like they were covering their shorts at the last week of every month, starting December, January, February, and then March is going to be the end of the quarter, right? And so we'll see if we keep following that, because we're definitely, they have sold us down so much. But when people were calling for it last week to kind of start bumping up, I was like, we're in the middle, we're in the beginning, and now here we are in the middle. So now I'm looking at going, Now this one, you can see, and I've even seen the bears, the people that are shorting the heck out of this market, coming out saying they're actually covering their shorts because even they're expecting a bear market rally or a relief rally of some kind that they also predict will fail. But, that's something I'm definitely looking at, because now we're at the 16th of the month, which is today. And so to see what's happening there. But the other things that people, and I think it's why you see a lot of people talking about covering their shorts right now, is because what happened? We're still going through earnings, but for a lot of companies, the blackout window is over, right? So what happens? You see executives start buying stock, right? You got Shopify, like we're over at our friend at TipRanks here. Links down the bottom if you want to sign up for it. You can see you got them starting to buy. Different executives, CEO bought a boatload of it, but also remember the dude sold like way more than this at the end of last year, okay? But obviously, they're buying because the blackout windows are over, which you can see is bullish if you want to see it that way. You go over to Uber, same thing. CEO bought a whole bunch of Uber stock. And so you're going to start seeing this with more and more companies when they report this and stuff. But the more important thing to pay attention to is all these share repurchase programs that these stocks are going to start probably doing and executing, and that they've announced, right? Microsoft has a 60 billion share repurchase program. Amazon has a $10 billion share repurchase program. You got Alphabet, Google, that is, a $70 billion buyback program. And of course, the daddy of them all who purchases more shares back than any company out there, Apple, has a $90 billion stock buyback program. And then Upstart even has a $400 million share repurchase program, which is rare to see that in a company being a very high growth stock. And so these are things, you can see, because obviously those big stocks I mentioned, they obviously can pull the indexes up. And, understand, I think it's 92% of those buyback programs are actually algorithmic programs. So the algorithm will be doing it for them. And so obviously not going to be buying on the way up, right? But some of these stocks are way down, like Amazon's been cut in half. Microsoft between 20 and 30%. Apple was going down. It started recovering, but, and they purchased more stock than any company out there I found. And so that's something that could absolutely stabilize the stocks and start to move them up, of course. And so, because they're not buying 100 shares at a time, right? Like we are. I mean, they're buying a lot of shares, big block purchases there. Plus, obviously, you'll see more executives, trying to load in and try to stabilize their stocks, but also kind of like a business line too. They want to own it cheaper, right? And you look at Shopify, it's been cut and just devastated, right? And some of those other stocks, Uber's been devastated. So the CEO's making a pretty good financial decisions for themselves personally as well. So that's something you can see. A lot of people are talking about that right now. I do believe that's why a lot of shorts are talking about how they're covering their positions that have been shorting this thing all the way down. We'll see on that. But I want to end the video with this. Anytime I find these corporate executives or institutions, being shady, and then the SEC acting like they're just dumb as a box of rocks, like they can't figure out what to do, against them and stuff. Yeah, but check this video out. Tell me what you think.
Corporate insiders and executives managed to avoid the current tech wreck with big payouts. Robert Frank joins us with that story this morning. Robert.
Good morning, Andrew. More than $5 trillion in wealth has been lost in the stock market so far this year, but some insiders at some of the biggest losers cashed out before the big drop. Peloton shares down 90% from their peak, but before the fall, CEO John Foley cashed out $119 million in stock. Insiders selling over $500 million in total. Carvana's market cap has dropped from $70 billion to $6 billion. But Ernest Garcia II, he's the father of the CEO. They control together the voting shares. He sold $3.5 billion in shares on the way up. His shares, that share sale totaling more than half of the company's current market cap. Palantir's down over 80%, but insiders there are selling over $2 billion of shares. CEO Alex Karp unloading over $1 billion in shares. Peter Thiel, he's a big investor and board member there, cashing out over $600 million before that big decline. You guys are talking about Coinbase. Those shares now trading at about 52, but CEO Brian Armstrong, he sold at $389 a share on IPO day, cashing out nearly $300 million in shares. And Roblox down 82% from their highs, but insiders cashed out $800 million before that big fall. CEO David Baszucki cashing out $260 million of shares last year. His biggest sales were in November. Just so happened that's when the stock reached its highs. These guys weren't alone. 2021 was a record year for insider sales. Total sales for insiders totaling $170 billion last year. Andrew?
How much of the sales were, as you said, in the context of like a Roblox, at the highs after the IPO, and how much of it was sold into so many of these offerings?
Well, it's a big mix. And I think the big question here, as you and I have talked about, is all of these, or virtually all of them, were 10b5-1 plans. And this is something that SEC Chair Gary Gensler has made a point of adding a new rule, because the idea was that 10b5-1s, by being pre-scheduled, were supposed to minimize the idea of insider trading. Instead, they kind of provided a cover for people, because you can set up a plan in the morning and start trading your shares or selling your shares that afternoon, and then you can also terminate the plan early. So all of these were sort of under the cover of 10b5-1s, whether it's right after the IPO or into the run-up. And I think that's the issue that regulators and company boards are going to start looking at. How many look like they were planned,
as you said? You make the plan in the morning, you're selling by afternoon, or you're selling within a week or two of the plan being put in place? Do we think that was a majority of these things, or these were actually things where they planned it 6 months in advance?
Again, it's a broad spectrum. It's a mix, but many of these plans, they started selling shortly after the plan was started. What Gensler wants is at least a 3 or 4 month sort of cooling off period between when you start the plan and when you can actually sell.
And so I'm not going to pretend, to sit here and be shocked. I don't know if you are. Let me know in the comments of what these guys do and what they get away with, because the list is like this long. But I'm more, upset with the SEC because they know what they're doing, know exactly what they're doing. But it's no different than they know what, market makers are doing. And these big institutions, they go, well, we'll try to propose a rule. Why are you proposing anything? Just freaking pass the rule. Put the law in place, for crying out loud, And you'd almost think to yourself, if these CEOs and these executives and board members had to ride those stocks down like the rest of us, and weren't allowed to do that right there, maybe they make some different decisions with the company. You never know. But the whole point in having stock-based compensation, the reason why executive pay got so out of control and it's so far away from obviously regular employees' pay increases, was because they were trying to align them with the shareholder, do what's best for the shareholder. Unfortunately, by doing this, I don't think maybe they thought that these executives and board members would be given this much stock to where it makes them, by far and away, have the most shares individually of almost anybody out there. I mean, it's insane how many shares these executives have now, right? And their stock-based compensations are just gigantic compared to their salaries. And so they're not looking out for us, right? Because we don't own 1 million shares or 1,000, tens of thousands of shares, a lot of people, but they do, right? And so, it'd be interesting if it could pass a rule to let them ride down some of these downtimes with us, and maybe they would, maybe they'd make a few different decisions or something, right? Within the company, or maybe be a little more honest. You never know. But I figured I'd just put that out there to you. But definitely watch for the pattern. See if the institutions start running us up either this week or next week. We'll see. I think it's usually after the options expire or whatever, but that's something to look at. And then start looking to see for news headlines about CEOs purchasing, other executives, the share buyback program and stuff, because that does tend to kind of get the shorts a little timid and stuff right after earnings season. So we'll see. Hope you got something out of it. Hit the like, subscribe button if you did, guys, and I'll see you later.